he's not really a data scientist. Well, he's not. He's a data journalist. But more, I like to think of him as a publisher, an owner of a product, which is a poll-based secret formula, and that's what he sells. And so he is loyal to his product, and that's what clouds all of his judgment.
Warning. The Political Trade features probabilities and perspectives about politicians, political parties, political outcomes, and political wagering. The Political Trade is rated NSFP, not safe for partisans.
Well, welcome back to The Political Trade, the podcast for people with a passion for politics, probability, and profits. I'm Jeff Joseph, editorial director of Luckbox Magazine, and joining us on the show today is David Rothschild. David is an economist at Microsoft Research and a fellow at the Applied Statistics Center at Columbia. David brings with him an economist's take on public policy. His data-driven work focuses on polling, prediction markets, social media, and online data in order to map and update public opinion, the market for news, and finance. And we'll kick off the show by talking about the prediction markets themselves, their relations to polling, their flaws, vulnerabilities, and how people trade. And then, as always, we'll ask David into the trading pits to get his take on some specific markets on Predicted, where he sees pricing opportunities and mispricing opportunities. So to get the most out of the show, open up predicted.org. Click on the Markets tab, top left, follow along, and leave your political ideologies at the door. And I'm joined by Mike Reddy. Mike is an editor at Luckbox Magazine, a new prediction market trader, and the producer of The Political Trade, the podcast where conservatives and liberals, Republicans and Democrats, partisans and wingnuts converge to make money betting on politics by trading in the prediction markets at predicted.org, the stock market for politics that trades 24/7. So it's been a while, Mike. I've actually missed you. It's been a couple of weeks since our last episode.
And I gotta say, it's been a little bittersweet, and I'm ready to come out swinging and get back into the flow of things.
Well, we were spending some time working on the next issue of Luckbox Magazine, which will be out next week. And it includes lots of commentary on the prediction markets as well. So if you haven't received your subscription, your free digital subscription is at getluckbox.com. We are back, and I don't want to front run our trades, but at least that time away gave us some great time to stack up some great guests. I'm really looking forward to our conversation with David because it's really strikes at the core of prediction markets and their vulnerabilities versus polling markets, and it's more of a macro look at the game that we're involved in and trading on a regular basis and how to best navigate those markets. So we're looking forward to that. I do know, and I don't want to front run and get in front of another story here, but we do have some other really interesting guests lined up in the coming weeks. And if you stick around to the end of the podcast, we'll tell you a little bit more about one of our upcoming guests. But let's deal with the man in front of us. As I mentioned at the top of the show, our special guest today is David Rothschild. We're really excited to have him on. David is a PhD in applied economics from the Wharton School of Business. His research pushes the boundaries on polling, prediction markets, social media, and behavioral data. He is the co-founder of PredictWise, a technology firm that's focused on the acquisition of audiences for political campaigns. Hi, David. Thanks for joining us.
Thank you for having me. I look forward to a great conversation.
Terrific. Well, let's jump right in. The biggest news of the day, of course, is Kamala Harris was added to Joe Biden's ticket yesterday. Do you expect that move to move the needle, the polling needle, in any discernible short-term manner?
No. So obviously, the prediction markets as well as conventional wisdom had converged on Kamala Harris as a front runner, maybe the front runner. And so this is kind of built in, right? And this is what I think traders understand a lot better than pundits or other non-data oriented people who are observing campaigns, is that there are things that are built in, and then there's things that are unique and make a difference. And in this case, the markets and the general wisdom had already assumed that she was a very safe bet, and so we don't expect a major shift as we move forward on it. That being said, I think there's a couple of aspects which I'm sure the traders will be thinking about. Number one, the markets did pretty well here insofar as they had taken what is a somewhat idiosyncratic set of data and had put it together and put her as a very likely person. And also the markets did quite well during the course of the day yesterday. They flipped briefly to someone who was not ultimately the person that was chosen, but of course they flipped to Senator Harris prior to the announcement. So maybe some inside information, maybe not, but they're definitely very quick on the ball yesterday.
Well, that's an interesting point. Of course, as you noted, Harris, this idiosyncratic data was the general consensus that Harris would be the pick, and she dominated the VP nominee poll for several months, usually in the low 30s, getting as high as the low 40s over the last 4 or 5 months. And just for a brief moment yesterday, as Susan Rice became the second leading candidate, there was a period of time where she was the front runner in the morning yesterday on the day of the selection. Of course, that reversed immediately upon selection, and now we have Kamala Harris sitting at 98 cents right now as the nominee, the presumptive Democratic VP nominee. It's also worth noting that one of our recent guests, we had Dylan Ratigan on the show not too long ago, and we've had a lot of people opine on the vice president nominee market from the Democratic side, but there's somebody who really nailed it and really got it right. It's Dylan Ratigan.
Nothing has been more reliable in my political life than the guidepost that when it comes to selecting the final nominees for presidential candidates and especially vice presidents, whoever the person that is the most shallow, duplicitous, nefarious, hypocritical, sanctimonious, with the strongest celebrity potential is always the person that gets the job. And so the fact that Kamala Harris is only trading at 54 cents leaves so much meat on the bone for somebody who's guaranteed to get that job.
Guaranteed to get the job. Now, despite Ratigan's editorializing, we did not have anybody who was as emphatic about Ratigan or emphatic about Harris. So we have to give him kudos here and a little hat tip. But more importantly, David, what do we take away from this selection in terms of how the market digested this news and, again, relative to polling?
So when it comes to this question about what polling is providing versus what prediction markets are providing, polling is meant to get people's attitudes, possibly knowledge, even thinking about future behavior, but it's not meant to predict future behavior, right? So we are asking questions in polling such as, what would you do if the election were held today? We tend to avoid hypothetical questions because hypothetical questions are tough for people to wrap their head around. There's pretty low recognition of the possible vice presidential candidates, and people not only have that issue, they also would answer strategically. So people who want Harris to be the vice presidential nominee are going to be more likely to say, I would vote for Biden-Harris, but I'd be concerned about Biden-Rice, right? So they want to downplay that. And so polling data is not the best thing for this. This is where markets really shine. It's about pulling in idiosyncratic information. It is about something that is hard to build a model around. It's about grabbing dispersed information. And so this is something where markets are very good at predicting and something which polls shed very little light on, not only on who's going to be the choice, but more importantly, how people will react to it insofar as there isn't great polling data to cover these hypothetical situations.
So stepping back even a little further back, I know this all ties into the bulk of the research you've done, particularly in 2014, the Combining Forecasts for Election white paper that you did, which basically looked at increasing the efficiency of electoral college forecasts by generating first and then combining 3 levels of information: voter intention polling, fundamental data, and prediction markets. You cited the benefit of combining occurs in the greatest fashion at the earliest point because polls and prediction markets tend to converge closer to the event's resolution. And the research concluded that all 3 types of data provided meaningful contributions towards forecasting accuracy. Is that still your conclusion from that work? And can you summarize it a little bit more?
Yeah, look, the bottom line is that when you're thinking about this purely from a prediction standpoint, when you're very early in the cycle, you have all three data points are available. You have the ability to look at uh, polling data that is looking at hypothetical general elections. You have the ability to look at fundamental data in which you can say, hey, based off of historical things that have happened, what is the likelihood that someone's going to win or not win based off economics and party affiliation, looking at past election results, et cetera. And you have markets that are already up and running. And very early in the cycle, polling is quite unreliable. And fundamental data, it does its trick. It is useful, but fundamental models are not built as much to predict the future, but as to understand how things correlate that we may care about. It's to provide a kind of structural model of how people uh, vote, or how people vote in aggregate, at least. Whereas prediction markets are really able to pick up a lot about what's going on, and so especially from a state by state level, you definitely have just a lot more benefit from these prediction markets early in the cycle. As the cycle moves forward, fundamental data basically drops away as a prediction value, because essentially fundamental data, it doesn't shift. It is more about the generic Republican versus the generic Democrat. It doesn't really pick up the world as it becomes. And polling data and prediction market data tends to converge, because polling data becomes the primary input into prediction markets, except for times of high information flow. So when there's some idiosyncratic event in the hours after a debate, before a big announcement or right after a big announcement, prediction markets can pick up those quick changes that polling, which generally lags several days, both in function, because polling takes time in the field, and because it takes time for the likely voters to learn what has happened, generally lags a few days behind.
So your 2014 study on combining forecasts for elections also identified a number of polling flaws and biases. I wanted to walk through those briefly with you. One was the anti-incumbency bias with respect to the Electoral College. Can you speak to that a moment? And is that still a bias that exists?
Yeah, maybe we're seeing that in some of the narrowing we're seeing right now, but the short of it is that basically the generic opposition always looks better than the person that you have, right? So people know they sort of don't like what's going on. This is a common thing every 4 years. There's always some people who are grumpy, and so the known entity always feels worse than the unknown entity. And so the unknown entity, the challenger, always pulls a few percentage points above how they pull once people get to know them. That's just the nature of the game. A generic candidate is always the most popular candidate on the ballot. And so you always see that polling in August or July, or kind of early in the cycle, you always narrow a little bit towards the incumbent. The incumbent always does a little better on average. And this is something which, we've been seeing some narrowing right now, and possibly could be attributed there, although obviously we still have a little time to go.
Well, and that also is in line with another flaw that you identified, and that is the tendency for there to be a fading of early leads in election results, and as numbers get tighter than polling numbers closer to the event. Is that still consistently a factor?
Yeah, hard to disentangle these events in this case or this year, but this is something we see historically, and so that's something you have to build into any model. Look, many of your listeners may be out there looking today. Nate Silver released his model today. I haven't read through the full methodology, and I probably won't, because I don't have the 10 or 15 hours, whatever it would take to read through it. But ultimately, Nate doesn't build his models in historical data. Nate is adding in tons of variables to quote unquote account for the uniqueness of 2020, and trying to assume that this will be somehow different than other years. And maybe it will, maybe it won't. We don't have that many observations, right? There are only so many elections that have happened in American history. But that's a dangerous game. I'm going to look at the historical data and tell you what the historical data says, and assume that it generally holds, or that it's better than trusting my gut at any given time. And that's what we see in the past. And so that's our best prediction of what's going to happen this cycle.
Well, there clearly is a less quantitative approach going on over at 538, and that's something I know is a discussion that you've been involved in the past, and Nate likes to take on that discussion. In fact, he gets pretty vocal about it. I recall a 2019 tweet where he said that he thought prediction markets are basically competitive mansplaining, which I thought was kind of a wonderfully woke but otherwise useless proclamation. But does the data continue to support the notion that you've identified earlier that prediction markets offer more forecasting accuracy than polling?
Yeah, so I think there's a bunch of different ways to look at this. Number one is that there is people who have been out there and taking Nate Silver's data and making hypothetical trades on them, and generally he would lose money in the market. Of course, it's tricky because you need a scoring rule to decide how much money he would wager on any given differential between the prediction market prices and his forecast. But we've seen that pretty consistently. And then also just looking at the mean squared errors over time for the elections in which he forecasts, or the whole set of elections. He doesn't put in all elections for all cycles. You're going to see this again as a pretty consistently that the mean squared error, the standard way in which we describe the probability forecast accuracy, is higher on prediction markets earlier in the cycle, and then they converge. But ultimately, the thing to know about Nate is that he doesn't really understand the nuance of what different types of data are doing, insofar as he can't quite grasp that fundamental data is useful, even if it's not a better forecast per se, because it's how economists and political scientists understand election cycles and changes in public opinion and how they think about different inputs over time. It's more about understanding the world, and he just doesn't get that because he can only think in terms of outcomes. And then when it comes to polls and prediction markets, again, he thinks that if, say, a poll at the end of the day has a similar mean squared error, then what's the point of a prediction market? He doesn't quite understand that prediction markets did perfectly well prior to the addition of polls. Prediction markets are more scalable, and that not necessarily that one thing is right and one thing is wrong. I don't view this as necessarily a horse race all the time. It's different types of data that I want for different types of things. But he's not really a data scientist. Well, he's not. He's a data journalist. But more, I like to think of him as a publisher, an owner of a product, which is a poll-based secret formula, and that's what he sells. And so he is loyal to his product, and that's what clouds all of his judgment.
And I think that essentially is what your 2014 study was making the case of, that there's material value in polling, in fundamental data, and prediction markets in the aggregate, and the consensus forecast that you can arrive from using all three of those as opposed to strictly polling. I think it's helpful because our listeners and active traders in prediction markets rely so much on the polls. Just again, to step back and speak to some of the inherent flaws that there are. First of all, traders and researchers like you that rely upon polling as a component in their calculations know how to evaluate the polling agency for integrity and best practices in data collection. That becomes real important, but I'm not sure that all the traders out there know. So, for example, polling organizations conduct surveys very differently. CNN and Fox use telephones for live interviews. Politico uses online opt-in panels. Pew Report uses offline panels. Some use robocalls. So what are the best practices that contribute to data quality in polling? And then from that best practices list, what would be the short list of polls that you think we should be most aware of and most respectful for as traders looking, for the best sources of information?
So there are many different types of polling out there, and I assume that most traders are going to look at 538 or Real Clear Politics, which show the polling aggregations. I was a big fan of Pollster, but Pollster is no longer in existence, unfortunately. And there's a bunch of different things to think about. Number one is that I like Real Clear Politics because it just lists all the polling and provides the values and then takes a simple average. The problem with Real Clear Politics is that it's not clear what their rule is for inclusion or not inclusion, both by time-wise, so when they drop things out, and poll-wise. although it is actually a pretty hardcore right-wing organization overall. So it's kind of weird if you read their editorials. And they do choose a lot of very low quality right-wing polling. So just keep that in mind. And then Real Clear 538 just like does some really fancy stuff on the back end. It's not well explained. And so it's kind of like Nate's gut about how you aggregate it, but all the data is there. He puts in all polls, regardless of whether or not they're incredibly horrible, left, right, center, low quality, high quality, internal, external. So that's something to keep in mind. Mainly the big divide is between live polling and online polling. So whether or not there's a phone operator or whether or not there is simply online, but obviously there's a lot of nuance there. So most of the phone polling is done with actual live people, but some of it actually is computerized.
So you have these different survey and sampling protocols among these different polls, but to kind of cut to the chase, which are the ones? What is the approach that generally results in the highest accuracy and integrity?
The answer is it's always best to aggregate polling within reason. You want to aggregate high quality polling is the thing you want to do. Basically, every cycle the polls are wrong a few percentage points, and generally they are wrong a few percentage points in one direction or the other across a bunch of different races. And so what happens is that there are extreme right-wing polling companies that every 3 or 4 cycles look amazing because they're always 3 or 4 points to the right of the consensus. And so the cycles which end up to the right of consensus, they're awesome. The ones that end up to the left of consensus, they're just horrendous, right? So that's not a really good thing to follow on a regular basis. And then you're looking at a bunch of polling that you say, oh, okay, so I aggregate across everything. Is that better or worse? But generally, you do want to kind of drop out the really crappy or low quality partisan polling or low quality polling, and you really just want an aggregation of the best polling.
Well, I think the challenge for 538 has been that there's really no method to correct for all the limitations that exist in polls, yet I believe that's what their effort is. I mean, the parallel to that would be in trading, particularly in investment management. You have 2 schools of thought. You have the quant trader, algorithmic based quantitative trader, and then you have the discretionary trader who trades on fundamental events and news. And that technical versus fundamental trader are 2 very different worlds. And even if you have a pure tech or quant-based trading system, ultimately there's someone applying a discretionary fundamental overlay that makes some decisions as to when to change the model, when to adjust the algorithm. And that fundamental overlay is exactly what Nate Silver does at 538. He takes in all this data, but he still has a non-transparent weighting mechanism that we really don't know what he's doing, but he's shifting things around based on what? Do you know?
The best way to say it is that he's putting a score for each of the various polling companies. He is then weighting them in some sort of way of his reliability score and trying to adjust for their long-term partisan biases and stuff. And it's all somewhat reasonable, things that people could do. But the bottom line is that we have very few outcomes. There just aren't that many elections, right? And within a cycle, elections are highly correlated with each other. And so ultimately, it's really his gut. Because these are completely under-identified. All the stuff he's doing is thoroughly under-identified. There simply is not enough historical data. This is not financial outcomes that happen every quarter or every day, depending on what kind of, or sales, whatever you're looking at normally. These are very rare events. Most polling has no ground truth. And basically, these are just not things that you can solve for in a very meaningful way, and it's his best guess.
That's interesting. I also found it interesting. A couple days ago, Aaron Brown, I don't know if you know Aaron, but I've spoken with Aaron in the past and we've done some interviews with him. Aaron Brown is the former chief risk manager at AQR, which is a quant trading hedge fund firm, a large one. And he also was a professional poker player. He wrote the book called The Poker Face of Wall Street. And he's a professional gambler. He's a risk manager for a billion-dollar hedge fund. And he recently opined to Bloomberg that he questioned these quantitative predictive models, particularly the one at The Economist, relating to the Trump-Biden probability of win right now. And he was noting that in a matter of weeks, the probability of a Trump win went from 54% at The Economist to 7%. So a 40% or 47% move in essentially 5 to 10 weeks. And he feels like those numbers should be much closer to the mid 40s. And he used a really interesting logic. He was basically saying, well, 20 years ago, if you're predicting the outcome of the 2020 presidential election, you would estimate the Republicans to be at 50% 20 years ago, not knowing, who the candidates are, but knowing that's predominantly two parties. In November, the odds will be either 100% or 0% based on whatever the outcome is, right? Someone's going to win, someone's going to lose. So in that sense, it would take 20 years to cover those 50 points, to go from 50% to either 100 or 0. Yet he's saying in the meantime, in a matter of weeks, The Economist saw a 47-point move just in a matter of weeks. He thinks the move is simply way too big. It is, and he has no faith in the model because he feels like it's maybe 4 times bigger than it should be. And that this number should actually be more in line with either predictive pricing or with Tetlock's model over at the Good Judgment Project and somewhere in the mid 40s. So what do you think about that criticism?
So I don't think there's much valid to his criticism over when the markets or when the probabilities should shift. Insofar as certainly 20 years out, you would put probabilities at 50-50. But also, generally speaking, a little over a year out, it's always 50-50 the way the country is set up and the way the Electoral College is set up. So the idea that you should see gradual shifting in any sort of way is not very clear to me. The bottom line is that polling really comes into its own as a valid measure at a certain point during the summer into the late summer into the kind of fall season. Votes harden pretty quickly over this time period in July and August into September, and voting starts, upwards of 40 days out of election day, sometime around October 1st. And so you're going to expect probabilities to shift over these frames. And in 2012, you saw a race that was almost 50-50 shift to mid 90s almost for Obama over the course of just a few days because of their dramatic event, which was the collapse of Lehman and the McCain campaign kind of collapsing. I'm sorry, this is 2008, and the McCain campaign kind of collapsing around it. And so, I don't think there should be some sort of magic bullet on when probabilities come together. That being said, I think that The Economist, has written some good stuff. Andrew Gelman put out a very nice blog post on his website about where they can find sources of uncertainty or not. And the bottom line is that they built a model that is just built on the best historical knowledge that we have. Andy is an extremely smart person and went through it and recognizes the difficulties of it. And maybe this year is unique, maybe it's not. But if you kind of build off the historical data, you end up with a very strong probability for Biden with the kind of lead that he was looking at, which is slightly narrowed. Obviously, if you see a lot of fluctuations, I'm much more concerned than if you see a narrowing around a given time frame. Very high fluctuations, that's concern for a model because probability shouldn't shift dramatically up and down all the time. But if it narrows around a point, that's fine with me.
Well, we're going to take that information and walk you into the trading pit in a moment. We're going to ask you to take a look at some predicted markets and tell us what's catching your eye and where you see mispricing opportunities. So David's best bets are coming up in just a minute. But first,
want a little more luck in your life? Get Luckbox, the control freak's guide to life, money, and probability. Named the best new magazine of 2019. Luckbox is a must-read for side hustlers, gamblers, entrepreneurs, and active investors. Each issue features best bets from prediction market experts, as well as timely sports wagering, stocks, options, futures, and cryptocurrency trading ideas. You can buy Luckbox on newsstands, but with this special offer, Listeners of The Political Trade can receive a 10-issue digital subscription absolutely free. Just visit getluckbox.com to receive the award-winning magazine right in your inbox. Don't rely on luck. Get Luckbox for free today. Learn more at getluckbox.com.
Well, welcome back to The Political Trade with economist David Rothschild. We're going to walk into the trading pitch right now, and David's going to share some of his trading ideas. Remember, when we discuss a contract's price on predicted, it's synonymous with what the market forecasts the probability of that specific outcome to be. So a contract trading at 44 cents implies a 44-cent probability of that outcome occurring. And David's put some trades together for us, so we're going to start. David, what's the first market we're looking at?
Well, let's focus on who will win the 2020 U.S. presidential election. And the thing here is that we can have a lot of discussions about whether or not we think that Biden or the Democratic nominee is 60% or 70% or 80%, depending on how much you put uniqueness into the 2020 election. I want to focus on something else, which is more in the weeds for the predicted traders, which is how does this look compared to the state-by-state markets on this platform, right? And so right now, you are looking at a bunch of states that we would call swing states, still sitting above 65%, 65 cents on the dollar in order to take that Biden position. Specifically, you're looking at Wisconsin, Nebraska second, Pennsylvania's up there at 67%, Michigan 72, et cetera, et cetera. Basically, it is very hard for me to build a model of the correlation between the errors of these different states to come to the conclusion that Biden is leading in 279 electoral votes at 65 cents per piece independently, and that he's only 60% or less to win.
So just another way of saying that is that the states that are hard blue come up to about 270 plus votes. And of course, that's what's required for electoral college win. And those have probabilities that are priced in excess of 65 cents. So you already have this aggregate total pricing in achieving an electoral college victory, and they're priced at 65 cents at the state level. Yet when you roll that up to Biden in the who will win the 2020 U.S. presidential election market, he's sitting at 60 cents. And that 5-cent delta there, that spread, it would make sense for that to be at 65 cents if the underlying components all were averaging 65 cents. Is that
it's not perfectly direct. So, basically, it depends on how independent you think the various electoral colleges are, right? So the assumption would be that an error in the upper Midwest is likely to be pretty similar across the upper Midwest, right? So let's assume that the whole upper Midwest is polling a few percentage points too high for Biden, okay? And that's possible, right? Then presumably he may lose a lot of them altogether. That's fine. But the other way to say that is that, that it also that in that case, if you assume that they're very, very correlated, then at that point you end up, if you assume they're perfectly correlated, then the binary likeliness of him winning the 270th electoral vote should be exactly equivalent to him likely winning the electoral college. Now, if you assume they're independent, if you assume the errors are not that correlated, so let's assume that the error for Arizona, which is a very different demographic than Wisconsin, are not that correlated, then it's possible that these are not one for one, but then he's already leading in Arizona, Florida, North Carolina, and he's leading the polls in Ohio, so he's down in the prediction markets, but in Arizona, Florida, and North Carolina. And those are three big states in which any of those states could then fill in the gap if he loses some of the upper Midwest. And so I don't want to get into the question right now of whether or not I think that the overall markets should be more or less bullish. But I will say I find this as an internal inconsistency within the predicted exchange. And so that's something which I'm keeping a very tight eye on.
Yeah, and specifically that either lends to a arbitrage opportunity or an expected value trade, because it raises the question, are the national markets underpriced or are the states being overpriced? if one's at 65 and one's at 60, either Biden is a pound the table buy on an expected value basis at 60, or those states are overpriced at 65. Well, this is the trade segment. You're supposed to make a call. And which one do you think it is?
So if you take a look at the polling data as well, what you're seeing is if you compare, imagine in your mind you have comparing across the main swing states, the current Biden position in the polling to the probabilities that are being provided by the markets, you're going to see that the states are already heavily discounting Biden's leads in the polls. So basically, Biden is leading, 5-6 percentage points in Wisconsin, Pennsylvania, and Michigan, but is in the high 60s, low 70s in the markets. On the flip side, states in which President Trump is up 5 or 6 percentage points, he is 90% to win in the markets, right? So the markets are already being incredibly harsh against Biden, assuming some mix of polling error that goes for Trump, plus maybe some additional mix in there of electoral fraud or whatever else people are assuming that's going to happen this cycle. And so, knowing that already, I tend to think that the states are already very conservative for Biden. And so this even more conservative electoral college on top of that does not seem to mix. So I would say in expectation that Biden for president or the Democratic Party for president is a buy. I know a related contractor force to that is this probability that Biden is not the nominee, which I think is highly over inflated. And so if you get into the differences between these contracts, but overall, anything in which you're getting the overall victory of Biden, whether or not you're buying it from the party or Biden or the electoral college, you're buying the suite of electoral college outcomes. I consider that a really strong buy at this point.
So particularly at 60 cents, Joe Biden to buy at that level.
Yes.
All right. Well, moving on to the next market. Which party will control the House after the 2020 election? Of course, currently the Democrats are trading at 85 cents, Republicans at 17 cents. Democrats have a very healthy lead here. Is 85 cents underpriced? Where do you think this should be trading?
Is basically free money, right? The Republicans are not really challenging the House. They just aren't. The Democrats have a commanding lead. Any single forecast, it is virtually inconceivable the Democrats losing the House. And so, of course, that ties your money up. Of course, then this is here we're talking about this will not pay off until after Election Day. So it doesn't, you paying the withdrawal tax, you're looking at the profit tax. At what point you want to clean up, but the true probability here approaches 1.
And you do have a trade here that's a little bit more speculative. You asked us to pull up the market. Which party will win Florida in the 2020 presidential election? Democrats are currently trading at 58 cents to win Florida. Republicans at 46 cents. Of course, 2020 isn't 2016, but Trump carried Florida in the 2016 election, taking home about 49% of the vote to Clinton's 48%. Of course, COVID has hit Florida particularly hard, and recent Change research poll had Biden ahead by Florida in 6 points just last week. But polling lead in the state isn't as strong as the national average, that's for certain. So what do you think about this trade? Where would you place the odds?
So basically, I pulled up Florida because I like to look at Florida in conjunction with also these upper Midwest states we're talking about, Wisconsin, Pennsylvania, Michigan. We're talking, this is a pretty big early polling lead. And especially if you're looking at Florida, DeSantis' numbers, the governor, and the president's numbers for handling COVID are way down. And the situation in both Florida and Texas seems to be getting worse before it will get better. And ultimately, I'm not going to push too hard on this, but as I said just a few minutes earlier, compared to what we're seeing in the polling data, compared to what we would expect historically, looking at the types of trajectory we're looking at, there is an incredible assumption being made in the markets here about the strength of President Trump's comeback combined with just a massive correlated polling error. We saw a correlated polling error that was a few percentage points in Trump's favor in 2016. But it seems to be that people are baking that into these predictions. And I think all of these ultimately then become likely buys, not as convincing as the overall buy, because if you combine it all together, that makes that electoral college a great deal. But I think the states are also something to look at. Is this just way too conservative? This is not saying that Biden's a shoo-in down there. It's just saying compared to all the data that's available, this is just crazy tight.
In Florida, the Democrats at 58 cents, you call that a buy then?
I do.
You do. All right, one more market before we take a quick break, and that is, will Joe Biden drop out before November 1st? That's a market that has the no bets at 87 cents, 87% probability. The yeses are trading around 14 cents. There are a couple of dropout markets unpredicted, one for Biden, one for Trump. Realistically, do you think there's any chance either of these candidates drop out before November 1st?
No. And so obviously health issues or real health issues aside, no. And so look, there's a bunch of markets trading in the 10 to 15 cents on the dollar range, which are probably very close to one or zero in this case. And these are just questions about how much money people have free to drop $850 here, $850 there. It's a pretty nice return over a short period of time.
It is. It's 87 cents right now to pick up 13 cents. Over the next couple months, that would annualize, probably close to 30% when you think about what is essentially a 15% return right now. So the trade is no, Joe Biden will not drop out before November 1st, and picking up about 13 cents on that. These are great trading ideas. And of course, if you don't have a trading account at Predictit, we're going to have $20 for you. You could take advantage of the trades shared by David by going to predictit.org/promo/TPT20. Sign up, deposit $20, and we'll match that first $20 you deposited. That's predictit.org/promo/TPT20. Deposit 20, you'll have 40 to trade with. It's that simple to sign up and trade along. We're going to take a very quick break, and when we come back, we're going to be asking David for this week's Lockbox trade. We'll be right back. Most gamblers and traders know a luck box is an undeserving recipient of a favorable outlier outcome. It's also the name of our award-winning magazine. And fans of political rhetoric will remember the term lockbox with the help of SNL cast member Darrell Hammond in this 2000 presidential run.
I would put it in what I call a lockbox.
So in our Lockbox segment, we ask our guests to identify a current predicted trade that looks like a lock or a sure thing. And of course, anything can happen. Bet responsibly. But David, which market should we turn to today for the Lockbox trade?
Well, Hillary Clinton is not going to run for president. There is no possible opening there. There's no possible desire. This is an extreme fantasy of both the Trump campaign and right-wing pundits and media. And so that is an easy money. Voting against Hillary Clinton running, yes.
And of course, the market you're referring to is who will win the 2020 Democratic presidential nomination. Hillary Clinton's in there at 2 cents still. She's still around. Who was it, Mike? Do you have a clip from one of our prior guests? I think it was Derek Phillips, right?
So traders on Predictit know that there's an ATM machine out there named Hillary Clinton. Just type her name into the search function of Predictit. You'll find Hillary all over the place. But you could always pick up some Hillary and make some small change on it.
And that has remained true to this day. Derek was dead on. There are a number of different markets right now where Hillary Clinton's still alive and well. In fact, Mike, you were telling me earlier today that she's very active she's like the gift that keeps on giving. She's very active in the comment boards. There's a lot of discussion and passion about her. Is that right?
Yeah, absolutely. There are some very impassioned people who believe that Hillary is definitely going to run, but they're out there and they're putting the money up to back their opinions.
I'll add one more thing on that, by the way, which is that I do actively look at the discussion threads, and you have to remember the discussion threads is a small percentage of traders who are, providing a mix of their wit and wisdom, and also possibly trying to influence other traders in positive or negative ways. But overall, you see a reasonably libertarian / Republican bend in the discussion thread. And I think weaving through a lot of the stuff we just talked about as far as buys or not buys, that is a bias of a lot of the active traders, and that is something to consider, of which may be better deals and not deals over the long term. Predict it maybe look good in some outcomes, but will definitely create some opportunities in other times.
That's right. And I'm not a big fan of those boards myself either. So thanks for that note. But you did identify our lockbox trade. And that is, again, as Derek Phillips put it, the ATM machine. That is Hillary Clinton. So that wraps things up for this week. Hey, David, thank you so much for your time. We really appreciated the time you spent with us. And we definitely would like to have you back on before the elections in November. So that doesn't leave us a lot of time. But as we get close, I think we could really benefit from your insights one more time. You could and you should, listeners, follow David along with his 70,000 other followers on Twitter at Dave or DAVMICROT. David is very active on Twitter, shares his perspectives and editorial commentary as well on politics and on the markets. So that's DAVMICROT on Twitter, David Rothschild. David, thank you so much for joining us. We appreciate it.
Thank you for having me. Have a great day and look forward to following along with the work you do. And of course, keeping my eye on the markets as this election progresses.
That's going to wrap up today's episode. Thanks for tuning in to The Political Trade, and please tell your friends about us and make sure you subscribe to the show wherever you listen to podcasts. Also, check out thepoliticaltrade.com to sign up for our newsletter, find us on social media, or send us a message. It's all at thepoliticaltrade.com. I'd also like to share an announcement of our guest coming up in the next episode. Next week's guest is Mark Vargas, who former Governor Rod Blagojevich recently referred to as the mystery man that led the effort to get him out of prison. In advance of this upcoming episode, I've had a number of conversations with Mark. He is a criminal justice reform advocate with deep ties inside the Beltway and Republican national politics. The story of his 2-year effort to secure a pardon for Governor Blagojevich is pretty amazing, and I know you're going to enjoy this episode. So we're looking forward to that. That's next week on The Political Trade. Once again, this is Jeff Joseph.
And I'm Mike Reddy.
And remember, believe in math, master your trade, and join us next time on The Political Trade.